Poland is becoming an economic giant. It used to be one of the poorest countries in Europe, but now it's in the top 20 economies globally. Poland is recording some of the highest growth rates in Europe, where most countries are stagnating. As a result, Poland's becoming a power hub in the European Union. It's using its money to create the third largest army in NATO, as an important counterweight to Russia. So let's take a look at what's happening in this country and why it could be so important. First, let's try to understand where Poland is coming from. Poland has a history of extremes, with great highs and devastating lows. At some points in history, it was one of the most powerful countries on the continent, but at other points in time, it didn't even exist. One of the reasons for this is Poland's geography. The country is located right in the middle of the European plain, with no protection to the west or to the east. This meant that Poland was an easy target, going back to the Mongols in the 13th century. However, Poland wasn't always the victim. Poland reached its peak in the 17th century under the Polish-Lithuanian Commonwealth. At its maximum extent, this Commonwealth controlled much of modern-day Poland, Lithuania, Latvia, Estonia, Belarus, Ukraine, and some parts of Russia. Covering 390,000 square miles and 12 million inhabitants, it was one of Europe's largest and most populated nations at that time. Economically, the Commonwealth was also relatively prosperous due to its strong agricultural and raw material exports. It was also called the breadbasket of Europe due to its grain exports, and it was also the leading timber exporter. This just goes to show what kind of potential Poland really has, which it holds to this day. However, this period of power and prosperity didn't last. The Prussians in the northwest, the Austrians in the south, and the Russians in the east didn't like how strong Poland was. They started to pressure the country until it completely collapsed. For 123 years, starting in 1795, Poland was divided between the three, and it didn't even exist. Poland's economic situation was mixed. The west of the country, ruled by the Prussians and later the German Empire, was modernized and industrialized. In the Russian and Austrian-controlled areas, Poland remained incredibly poor. The worst part about the partition, however, was World War I. The country was split between the Central Powers and the Allied powers, and as a result, it was right on the front line. Poland suffered heavy casualty numbers, and the economic destruction was severe. After the war was over, there seemed to be some hope, though. The communist revolution in Russia and the loss of Central Powers in World War I created a power vacuum. This was an opportunity for Poland to become independent again, which it did in 1918. But economically, Poland's situation was still pretty bad. It suffered from hyperinflation and high unemployment, and it was hit badly by the 1929 Great Depression. Just when Poland started to get back on its feet again, World War II started. In 1939, Poland was invaded by Germany in the west and the Soviets in the east, and it would be on the front line for many years to come. The country was once again devastated, and its economy was completely destroyed. About 6 million Poles were killed, 20% of the pre-war population. The Germans leveled 80 to 90% of the capital city. Poland's infrastructure was demolished, its gold reserves were stolen, and its farms were plundered. The country became one of the poorest in Europe, and it would stay that way for decades. Whereas the west of Europe recovered quickly because of the US Marshall Plan, Poland became a Soviet satellite state run by a communist regime. The country became a part of Comecon. No, not the comic book expo, the Council of Mutual Economic Assistance run by Moscow. This transformed the country into a centrally planned industrial economy. Poland started to make industrial machinery, ships, automobiles, and many more things. This caused economic growth on paper, and Poland got back to its pre-war economic size. But by the 1970s, Poland started to suffer from the problems that many of these centrally planned economies faced. State-owned enterprises were way too inefficient, and they were only kept alive by government subsidies. The government kept wages artificially high, but there were massive shortages of basic consumer goods. This only got worse in the 1980s. The government faced a debt crisis. There was hyperinflation, and people had to wait hours in line to get basic items. As a result, communist rule in Poland weakened, with more and more political opposition, mainly from the Solidarity movement. By 1989, the Polish communist government fell apart, with a new non-communist government getting into power. Now, by this time, Poland was one of the poorest countries in Europe. In 1990, its GDP per capita was $1,634 according to IMF estimates. Meanwhile, other European countries like France, Germany, and the United Kingdom had a GDP per capita exceeding $20,000. The obvious question was, how could Poland bridge that gap? Poland had to transition its state-run command economy into a free market economy, and this is incredibly difficult to do, which is why it's called shock therapy. When a former communist country opens itself up to trade and cuts government subsidies, state-owned enterprises collapse because they're so uncompetitive. This means that millions lose their jobs and enter into poverty. Because it's so difficult, it failed in most post-Soviet countries. In Russia, Ukraine, Kazakhstan, Georgia, and Armenia, there was a huge economic crisis in the 1990s that bankrupted the middle class. Meanwhile, a few oligarchs managed to take over their economies to form powerful monopolies that still persist to this day. However, Poland managed to avoid this. In 1990, Poland launched the Balcerowicz shock therapy plan, and 35 years later, we can say that that was the best transition of any post-communist country. There are a couple of reasons for this. First of all, Poland was less communist than most of the Eastern Bloc, as most farmland was still privately owned. This meant that a big part of the economy could still run during the transition. Also, Poland avoided selling former state assets to a few oligarchs. The Polish government put many state assets in national investment funds, or NIFs. In total, these NIFs comprised more than 500 large and medium-sized corporations. These funds were listed on the newly established Warsaw Stock Exchange, and every citizen got vouchers to buy shares. Meanwhile, the private sector got all the room it needed to grow. Private businesses were allowed to compete, and subsidies for state-owned enterprises were frozen. By 2001, the private sector was already 70% of GDP. This quickly replaced the state-run sector and provided new jobs. On top of that, Poland received a ton of support from the West, unparalleled by any other post-communist country. The Paris Club, the London Club, the IMF, the World Bank, and the European Union stepped in to provide debt relief and economic assistance. They clearly wanted Poland to join the West, and they succeeded. Still, despite having a better-than-average transition, it wasn't without any struggles. Initially, Poland was hit by a deep recession as state industries collapsed. In 1990, the inflation rate peaked at 568%, and it would remain high for years. The unemployment rate peaked at 15% in 1994, and later, during a new economic crisis in 2002, it reached 20%. Living standards temporarily declined for millions, and the communist ideology was making a comeback among the working class. However, Poland's economy was growing rapidly, and its GDP went from $66 billion in 1990 to $173 billion a decade later. Now, eventually, ordinary people began to benefit from this economic rise, and a return to communism became unthinkable. And by that point, Poland was about to make another huge leap by joining the European Union. Poland had already signed the European Agreement back in 1991 to prepare for EU membership, and in 1994, it formally applied to join. 10 years later, in 2004, Poland officially became an EU member state. This had huge implications for the Polish economy. Within 4 years of joining, Poland's GDP doubled from $256 billion to more than $500 billion, and it's been growing ever since. Poland benefits a lot from free trade with the EU. More than 70% of Poland's exports are going to EU countries, and in general, Poland is one of the highest trading countries relative to its economic size. Poland's trade to GDP ratio has climbed dramatically, going from 44% in 1995 to more than 110% now. The reason is quite simple. Poland has free access to the huge $20 trillion EU market, without having to pay tariffs or needing to do customs. Meanwhile, Poland has relatively low wages for EU standards. In Germany, people on average earn a gross salary of about 52,000 euros. People in Poland on average earn about 22,000 euros a year, less than half. That's why it's the perfect place to make goods or to do services for the rest of Europe. An added benefit is that Poland directly borders Germany, the largest economy in Europe by far, with a GDP of $4.5 trillion. It only takes about 6 hours to drive from Warsaw to Berlin, so it's very easy to trade between the two countries. It's not only free trade that's helping Poland, though. The country receives a lot of EU investment under what's called the Cohesion Fund. Basically, the EU provides support for poorer member states with money coming from richer states like Germany, France, or the Netherlands. To qualify, countries receiving the money must have an average gross income per capita of less than 90% of the EU average, and Poland falls within this category. The goal is to level the playing field in order to make it easier to cooperate between member states. Also, the richer member states should benefit from economic growth in poorer member states because they can trade more with them. Luckily for Poland, it has gotten the most EU funds of any member state by far. In total, we're talking about 261 billion euros, or about $300 billion over 20 years. Just to give an idea of the scale, that's way more money than the Marshall Plan used to rebuild Western Europe after World War II, even when adjusted for inflation. Poland has used this to invest in infrastructure, education, and modernization, and the country changed completely. Back in 1990, Poland had barely any highways, but now it has an extensive network connected to the European highway system. Poland's education levels are now higher than the OECD average of developed countries and comparable to Western Europe. Poland has also used EU funds to start innovation hubs and fund startups. Now, up to this point, we've only covered the upsides of joining the EU for Poland. And while it has definitely been a net positive for Poland's economy, there are also many issues. First of all, Poland has a huge problem of immigration to the rest of the EU under the Free Work Agreement. Basically, this allows any EU citizen to work in any other EU country without needing a special work visa. For people in relatively low-wage countries, including Poland, it is very attractive to go and work in higher-wage countries. This includes people who work in agriculture or in manufacturing, but also highly educated doctors or engineers. This leads to a huge brain drain in Poland, which hurts Poland's economic growth. In the early years, this was a really big problem, with millions living and working abroad. The only upside was that they sent remittances back home. As Poland's economy is growing, though, more and more people are starting to stay. There's even talk of a reverse brain drain now, with members of the Polish diaspora returning to take part in its economic successes. Still, even if the brain drain issue gets fixed, the EU is still not perfect for Poland, because when the rest of the EU suffers, Poland also has a big problem. And starting in 2008, the Great Recession that started in the US hit Europe badly. While the US started to grow again rapidly, Europe went on to stagnate for a whole decade. The major European economies only started to show growth again in 2022. Poland felt the impact of this, because its whole growth engine relies on the rest of Europe. Without growth in Europe, Poland also got stuck. In 2008, Poland's GDP was $536 billion. 9 years later, in 2017, it was still slightly lower at $528 billion, a rather depressing result. It looked like Poland would stay stuck in the middle-income trap and that it would never really make it to the top. Still, despite all these difficulties, Poland made a huge comeback after 2017. From 2017 to 2024, Poland's GDP has grown from $528 billion to $914 billion, a massive jump. And it's also worth looking at Poland's GDP in purchasing power parity terms. The cost of goods and services in Poland is lower than in the rest of Europe, so a dollar gets you more there. If you adjust for this difference, Poland's GDP has already reached $2 trillion. At purchasing power parity, Poland's GDP per capita is also quite high at $55,000. That's slightly ahead of Japan and very close to the major European economies. And most of this prosperity arrived in the last 8 or so years. There are a lot of reasons for this, and it's not just because of joining the EU. Clearly, some things set Poland apart from the rest of Europe, and it's one of the few countries that's been growing. One of those things is continuing growth in manufacturing. Poland's total manufacturing output has reached $136 billion in 2023, nearly 20% of its GDP. In many ways, it's copying the highly successful German model of manufacturing, which made Germany the third largest exporter globally. Poland now has a thriving automotive industry, with companies like Fiat, Volkswagen, and Toyota making parts and doing assembly there. Poland's also making more and more machinery and equipment, metal products, and chemicals. It's a leading exporter of household appliances and furniture. Most of Poland's manufactured goods go to the rest of Europe, making it a regional manufacturing hub. Its free access to the European market gives Poland an advantage over China, and its labor costs make it more competitive than Germany. Another thing that Poland exports to the rest of Europe are services, mostly tech and business services. IT and ICT alone make up 8% of Poland's GDP, with lots of developers, engineers, and data analysts. Poland has focused on strong STEM education in recent years, and it has paid off. It has become the perfect place for Western tech companies to outsource. It's a stable country with high-quality expertise and access to the EU, but still with way lower wages than its peers. That's why Google, Microsoft, and Amazon are all investing in the country to make it a European technology hub. It's not just tech, though. Poland is also doing work in accounting, HR, customer service, and many other things for the European market. About 2.3 million people in Poland are now employed in business services, and they're exporting more than $40 billion in 2024. This growth in manufacturing and business services is fueled by foreign companies, who are investing a ton into the country. Poland's the #1 destination in FDI in Central and Eastern Europe, and number 6 in Europe in general. It's very impressive considering its size. Most of the investment is coming from other European countries, with the most investment from the Netherlands, Germany, and Luxembourg. It's part of the nearshoring trend, where companies want to produce goods and do services closer to their sales markets because of global uncertainty. For the US, most nearshoring goes to Mexico. But for the European Union, Poland is the best place to do this, not only because of lower wages, but because Poland has a well-developed finance sector. Some of Poland's biggest companies are actually banks and investment firms, and they make it easy to invest in the country. Lots of this investment is actually going towards construction work, which is a big part of the Polish economy. Companies are building houses, office spaces, and industrial facilities. The government is also spending a lot of money on infrastructure, like roads, railways, and energy. In total, construction employs well over 1 million people in Poland. Next year, the construction sector is expected to exceed $110 billion, well over 10% of GDP. That's very outsized compared to other countries. YouTube just dropped a mind-boggling announcement. It is paying creators $64 million per day. Why? Well, because YouTube doesn't have enough creators. That is why you see videos on your homepage that have less than 1,000 views, like this one. Now, of course, that doesn't mean everyone should start a channel, but if you have ever wondered about starting a YouTube channel, or a faceless YouTube channel like this one, well, now's the perfect time. YouTube is paying creators millions every day, and it's pushing newer, smaller channels now more than ever. But I'm sure many of you have questions on how to get started and how to grow a channel. We get questions in our email all the time from some of you guys. So that's why we've decided to put all of our YouTube advice into one training bootcamp for the low price of completely free. So, if you're someone interested in starting your own YouTube channel, you can sign up for this bootcamp by clicking on the link in the description or on the screen. Sign up now because, unfortunately, unlike YouTube videos, the bootcamp is like a Zoom call, so it's limited to just 100 people. Okay, let's get back to the video. Another industry that's worth mentioning is the defense industry. Due to its vulnerable position on the map next to Russia and Belarus, Poland has to be strong, and this is also playing a role in its economy. The largest Polish defense company, called PGZ, is rapidly growing. This is fueled by a massive defense budget of 4.7% of GDP this year, equivalent to about $45 billion. A lot of this is going towards buying new equipment from abroad, but eventually, Poland wants to be self-sufficient in key areas. Undoubtedly, it also wants to become a key arms exporter to the rest of Europe to grow its economy. Now, if we take a look at the future, the big question is, will Poland keep growing? In the near future, the expectation is that Poland continues to grow rapidly, and that the country will reach a GDP of $1.3 trillion by 2030. But under the surface, there are still problems. One of those problems is the extreme regional disparities that could seriously undermine political stability. The metropolitan area of Warsaw is the richest in the country, with a GDP per capita of more than $40,000. But the poorest areas of Poland have a GDP per capita of around $15,000. The growth that is happening in the country is also not divided equally, with the more prosperous areas growing faster than the poorer regions. It's so bad that people talk about Poland A and Poland B, mostly between big cities and the countryside, and the West and the East. And when people are living in different worlds, that's not a good sign. Another big source of headaches is Poland's growing national debt. Now, right now, Poland's debt to GDP is only at 54%, but it is climbing rapidly. Last year, the government deficit as a percentage of GDP reached 6.6%, driven mostly by the increasing defense budget. This is obviously not sustainable, and it will rapidly increase the debt level. By 2030, Poland's debt to GDP could already be at 70%. That's above the EU average. Interest payments could get out of hand, meaning that Poland is forced to slow down its government spending. And because government spending has been such a big factor in GDP growth, this also means economic growth could slow down. Another big bottleneck is Poland's demographic crisis. The country has the worst fertility rate in Europe, at just 1.1. That's only half of the replacement rate of 2.1. Last year, there were only 250,000 births in Poland, the lowest figure since the end of World War II. Its population declined for 6 years on end, losing 100,000 people in 2024. Poland's facing rapid aging and long-term population collapse. 10 years from now, Poland could already lose 2.1 million workers due to the demographic problems, about 12.6% of the current workforce. This could hurt Poland's GDP by 6 to 8%. If we look ahead even further, it could get way worse. By 2060, Poland's population could drop from 37 million now to just 27 million. And by the end of the century, Poland could have only 19 million people left. Now, it's hard to know what the effect on the economy is exactly because of things like automation, but it can't be good. Poland is going to have way too many old people that it has to support with pensions and healthcare. And it's not going to have a lot of workers and consumers compared to other countries. Because of these problems, Poland might very well stagnate when it reaches the development level of Western Europe. But even in that scenario, we shouldn't write Poland off as an irrelevant player on the world stage. It could have a very outsized influence in Europe. comparable to its blooming days in the 17th century. That's because Poland is still the ideal candidate to be a leader in Central and Eastern Europe. Countries like the Baltics, Czechia, Slovakia, Hungary, Romania, Bulgaria feel like they're squeezed in between the West and the East. But with its growing economic influence, Poland is taking a leading role to bring these countries together. In 2015, the Three Seas Initiative was launched, connecting countries from the Baltic Sea to the Adriatic Sea and the Black Sea. It includes a host of members, with Ukraine and Moldova being partners. The goal is to cooperate more between the countries, especially economically. With the Via Carpathia, Eastern Europe is being connected via railway all the way from Lithuania to Greece. This close integration with Eastern Europe could be a huge opportunity for the Polish economy in the future. As Eastern Europe develops, Poland could shift its trade from the west to the east and escape some of the stagnation that's happening in Western Europe. Meanwhile, Poland is increasingly becoming the regional guarantor of defense, mainly as a counterweight to Russia. There's more and more regional defense cooperation, with the Lublin Triangle between Poland, Lithuania, and Ukraine, and the Bucharest 9 area of Poland, the Baltics, the Czech Republic, Slovakia, Hungary, Romania, and Bulgaria. Poland is the leader in these groups, and it is using its massive military budget to create the third biggest army in NATO, only behind the US and Turkey. This gives Poland influence far beyond its national borders, which is not a new concept at all. When World War I was over, Polish statesmen made plans for an intermarium, a federation between these three seas, led by Poland. The main goal was to be a balancing power between Germany and Russia, but Poland also wanted to reinstate the former Polish-Lithuanian Commonwealth. Now, a Central Eastern European Federation is unlikely in 2025, but things are definitely moving in that direction. Thanks for watching.